What up, traders? What up, investors? Ken here from Dyslexic Investor, and we're going to be doing an exciting video today. And if you haven't already, please call your best friend, your best mate, your lover, and tell them that you love them and you care for them. And at the same time, boom, 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 please hit that like button down below. Greatly appreciate it. YouTube algorithm would love it. So yeah, anyways, so we're going to be looking at Cathie Wood. Once again, you know, she's my fave. Really love her investment style. I don't agree everything with her, but I like her high conviction ratings on some things. So two that I've always been kind of looking at, again, we're going to be talking about two more of the medical device slash healthcare kind of regime of stocks. We're going to talk about Invitae, and then Teladoc, with Cathie Wood going on CNBC 4 or 5 days ago and saying that she has pretty high conviction in Invitae being a gene tracking and being able to use that data and AI to create different screens for cancers, other various diseases across the board, and using the AI to kind of help make personalized medicine come to the user's fingertips. So without further ado, let's kind of just jump into the CNBC video with Cathie discussing on the promises of Invitae, and really going to be diving into that just a little bit more within this session today. All right, folks, let's go check that out.
Which one you think is the most underappreciated name right now in your portfolio that you'd be looking to add positions to?
Well, we just went through this morning. Invitae in the molecular diagnostic space is probably one of the most important companies in the genomic revolution, and it is getting hammered. You know, it's a company that has had historically small cash cushions, although they've rectified that with offerings, which is great. But it's investing aggressively to be the leader in the molecular diagnostic testing space. Many people, the disconnect for many people here is when they think of lab tests, they think of LabCorp and Quest Diagnostics, which are effectively very mature companies, commoditized, value stocks. And so it is a little bit like Tesla in the automobile industry. The new lab tests, which are going to be informed by artificial intelligence and big data and supercomputing power, are, we believe, in a winner-take-most market as we move into personalized medicine, much different from one test for all, although we'll see multi-cancer screening certainly in that realm. But we think the move towards personalized testing is going to give just a few companies the lion's share of the market, those companies with the most data, the highest quality data, and the best AI expertise.
Cathie, great to see you. Thanks so much for joining.
So that's that. So that was pretty interesting. Like, basically, I always kind of reference Minority Report in a lot of my investing, to be quite honest. It's the two movies that always come up within my investing stuff is Idiocracy and Minority Report, and you can kind of see the flip side of both of that. And then looking at some of this data, of course, we're going to look here on ARCG Fund. Of course, Invitae is their fairly large position, about 2.32%. Pretty substantial here. Again, going on that one. So going to the site itself is actually quite simplistic to use. Of course, they have their basic screens that you see here that looks at 61 genes associated with common cancers, breast, ovarian, and other various prostate cancer. Again, this is something that's shipped to your house. An order now in the sense of the step-by-step system. It's a very pretty intuitive site. Again, I haven't done any. I don't know anyone who has done this, but it's basically, yeah, step one, request a test online via telehealth or clinic, blah, blah, blah. Then you provide saliva sample from the comfort of your own home. And you just ship it to your labs, and then you get those results, and you just kind of go like that. So this is kind of like that, the 23andMe, but instead of the 23andMe, they use the data and understanding on where your family heritage has come from over the past centuries or millennia. This is more again going to be attuned to medicines and just kind of help understand of like, hey, Ken, you might have a higher rate of getting prostate cancer than someone else. You should potentially live this kind of lifestyle. Stop eating pepperoni pizzas out of your fantastic pizza oven that you have in their backyard, and maybe cut back on the amount of sitting down, and maybe you should get your butt up and start walking around. See, bada bing, bada bing. I just did my own doctor. I kind of know what the problems are, but that's into it. That's anyways. I'm kind of going off tangent again. But so this is again, I like this kind of stuff. I find it super like the minority part of things of just like, hey, this is literally trying to change us as being healthier humans and just taking charge instead of just going to your doctor once a year, even not even that at some points, and just getting your basic blood work. You're kind of being a little bit more proactive and just getting out there and trying to see on what could potentially come in that you want to be looking out for. Of course, with Cathie was talking about this one, this is going to be continuously expanding out on looking at different various SKUs in the market. It's not going to be like a LabCorp or something like that, where it's just going to be kind of bouncing around with just doing generic testing. They're going to have a smorgasbord of data and compiling that information to kind of give you the best results possible regarding your circumstances. So the combination of data, AI, fantastic. If you have tried this product, I would let me know down below if you're happy or it seems like some of the reviews I've read were pretty well conceived, honestly, and people actually enjoyed the whole process of things. And that on that one, so let's just kind of go into an Invitae stock itself here via Thinkorswim here. Of course, here's the stock on the weekly chart. Let's go back to a daily chart. Of course, when she kind of did that video, it was around these 2 days where it was pretty much beaten down, but then you saw the following day after the interview, it had a kind of a gap up from basically that that low of 34-ish to around that 38 to 39, and now the close of this Friday, the almost up to $43. Still very much beat down. It has been somewhat of in like a weird trending here. But that being said, this is going to be a very difficult chart to be looking at the daily chart. So looking at the weekly chart kind of tells us a little bit of a better prognosis. So Dr. Ken, looking at this one, initially speaking, we did hit some pretty crucial support here on the weekly chart coming into that very much hammered sell-off that we saw. That 200 EMA here, basically that support around $31. You see that I have a kind of an alert here around $30.92. Potentially, if this can come up and fail here at 45, we potentially could see it kind of run lower again. But that 21 to 34 EMA potentially could kind of create some resistance on the upside. We do have a pretty large squeeze set in place here, which is this little bottom half down here, entitling itself to Mabley, perhaps gonna explode into the upside. But we're seeing somewhat of some resistance coming in pretty substantially around that $55 price target. So again, this is not something that you're just gonna you can trade this one, but this is really something you really have to kind of be somewhat more higher conviction trade on it with longer term horizons. That's the way my viewpoint has been, because if you go here even to a monthly chart, the stock has been, again, came public, I believe it said in like 2015. It looks like that here has really done next to nothing, and then kind of had a couple blimps higher and blimps higher. On the monthly chart, look at that. It came down exactly to the 21 EMA on here. So that's around that 31 level. So that was a potential great buying opportunity for the stock. If that's being said, if we can stay above $40 in the short term of this, I think that this could be definitely a nice potentially portion of my portfolio to adding into this stock, just to be as a spec play, not being at a very high conviction trade like I am on like Tesla or that kind of thing. This is very much like, it's still really proving itself. So We can really analyze it on the tab here. A lot of people don't know that this actually exists in Thinkorswim, so I'm going to try to incorporate a little bit more of the technical and then the fundamental sides of the overall stock screening that we're doing here. So looking at the numbers and then looking at the research and then what the market analysts are saying, they don't like this one at all. Like you see, they said reduce, they say sell on the street.com. Market Edge is telling you to avoid it. Like just don't touch this thing left or right. You can actually put the little dinger here so you can get notified if the research stream upgrades or downgrades. So as well. Then you can kind of go through some of the fundamental analysis here. Of course, you see a lot of people kind of just go to the free cash flow per share. It's actually negative 2.51. That's not the best sign, but again, they took in a lot of cash via the stock offerings and so forth to create a better cushion to reinvest into the company to expand out to and just taking over the world in that sense. And at the same time, really not the world's greatest growth in that sense on that long-term stuff. Long-term debt, we don't need to get in that. The current ratio, sure, fine, whatever. PE ratio, I'm not really going to be looking at that. We do see the growth rates, which I like to kind of look at this little snapshot down here. You see revenue is actually kind of going down. So it's currently here, the 3-year average is around 60, the 5-year average is 101. So we'll see on this if this can continue going higher going forth. Again, really emphasizing the emphasizing the part of what Cathie Wood was saying is they are spending and accumulating all this money to put into research. They're not going out there hiring a bunch of salespeople and just getting people on the phone and trying to buy or advertising in that sense. They're really putting a lot of this cash that they have stored up back into the business to potentially become the market leader that Cathie's talking about. The next one that we wanted to look at is Teladoc. So I do not know. Like I've traded Teladoc. I've actually been long Teladoc, and then I dropped it, and then I went short Teladoc, and then I was great, and then now I bought back into Teladoc, and then I got stopped out. I don't know what the Hello Kitty's going over on Teladoc. This stock, I think, potentially has a very long-term potential of being a very. It is a fantastic company, but just having the stock prices go substantially higher. I'm more of an optimistic person. Take that with a grain of salt. So looking here on Cathie's ARK.com. So this is a fantastic platform that tracks all of ARK's investments and share prices and how much they accumulate and share prices and so forth. So looking here at the chart here, this is very distinctive of here. The dark purple line, this is all the amount of shares they have accumulated, and they're just continuously going higher. So very much an all-time high as of today. And at the same time, it is in the ARK W, ARK G, ARK F, and ARK K fund. So it is across the whole slew of the ARK stuff. And it's one of the largest weighting positions in the overall portfolio. The short position, 7.37%, nothing compared to the GameStop shorts or AMC shorts, but that is still pretty substantially. ARK's ownership you see here, of course, the United States company. So everyone, I think, is pretty much familiar with TDOC. We can kind of do the quick analysis here with TDOC. You can kind of see here the same kind of rating here. It's just kind of like, is it like a stay-at-home play? Is it a reopening play? Is this the future? Or is this going to go away? All these kind of various components of, like, again, I believe Teladoc is here to stay. I think it's made it completely simple on the sense of just trying to get a doctor on the phone and just having to make the appointment, talk to the secretary. The secretary can't get the counter to load up and blah, blah, blah. Like, this just makes it so much simple if you just need a simplistic, it's an MD on the phone to, hey, my that rash on my back, doctor, is reoccurring, coming back up. Can you get me that cream? Sure, Ken. Let me just send over the prescription. Boom, done. Bada bing, bada bang. I don't have to worry about anything. I just get in my car and I go to the Walgreens and get my my medication for my growth. Anyways, that's just a very dumbed down version of what we're looking at here. At the same time, a little bit potentially higher growth because you see the revenue is growing over the up arrows, and the book share book value per share is also going higher. Long-term debt is nothing substantially lower than we saw with previously company, and the free cash flow is actually up 36 cents. So I always like to see that. Year over year is slightly down, but this again, I love Thinkorswim because again, it just kind of gives a very simple graph. Like it goes from higher to lower. I like to see that. Of course, we want the debt to go lower, of course, but again, since Teladoc just made that acquisition last year or something like whenever it was, they're pretty much they paid a pretty high premium for that. Looking here at the chart here, so for TDoc, definitely again, Cathie Wood absolutely loves this stock. Very much a very messy spaghetti chart here, and it's not just because my line's here. Really, since his last earnings report, it has been pretty much just downfalling. Yes, we have seen a market sell-off with a lot of the high-growth tech stocks, but at the same time, we've seen a large sell-off on the sense of the folks that have been inside of the stay-at-home plays, the pandemic plays, the virus plays. I don't think people are just kind of dropping off of this because you're seeing, especially with like Teladoc and I think Zoom were like the two ones in Peloton have been ones that you just continue to kind of hear about. Like Peloton was the health side, Zoom was like the business communication side, and Teladoc was more like the healthcare side of things. At that note, we're basically coming down to that low that actually where I actually shorted it basically in like the October timeframe into earnings. Like I was a imbecile. I was a little bit risky. It wasn't large part of the position, but I shorted with via puts, and it did pay off a little bit. It paid off quite a bit. It was a very nice position, a very nice trade. At that same note, we're coming back down to that level. So that level is around 180. That one level is at 80. So we're going to be looking at. I'm going to get out my old trusty pen here. 1 second. And what color should I choose here? Let's see. Let's choose. You know what? We're going to choose green because we're a little optimistic today. So we're going to go with this one. So we have that, okay, that 180 price target, okay? We've seen 1, 2, 3, and now I feel like I'm at Sesame Street, and then 4. So this is basically 4 levels of support out that 180 range. So that's pretty substantially here looking at just straight at the chart. So that is a potentially, not saying it's a strong level of support because again, we did see on the way up, it kind of failed here multiple times. So the way up, resistance on the way up comes support on the way down. So that 180, a very strong line. Well, I actually drew that line pretty straight there. Very strong line of potential support. But on that note, this is only at a daily chart. So let's go to kind of flip over to a weekly chart because we're looking at stuff a little bit at a longer time frame. We're not looking at it at a 2 or 4 week window, potentially looking for 18 months at least on this one. At the same time, it's kind of been slightly stalling out. Again, of course, we saw that amazing run from the low, and that's really just kind of taken off its own here. Hitting a high at 308, we're seeing here some initial support around 180 like we just talked about. The parabolic SAR dots are just kind of a little mixed here on the weekly chart. This is a monthly chart, sorry. On the weekly chart here, you're seeing that pretty much that 180 time frame really kind of come out here. Just looking at this again, it's very much beat down because again, these are very, very large red candles on the way down. So this is something I want to be very careful about on just kind of going gun-hoing it and just throwing all my cash at it. I believe, again, very much so. This is, again, a little bit more outside of the spec play. So again, this is not a speculative trade idea. This is more of I would potentially look at this at a longer term trade and looking at that 180 to 185 potentially price zone there. So that potentially could be looking at those levels there. Moving forth on the, again, Teladoc, I don't completely have the knowledge base or the conviction rating that Cathie has on this one, because again, volume speaks louder than words, because she has it across all her funds. She's been buying on the dip. They've been adding it more and over the time. But again, her time horizon is 3 to 5 years. So that's a lot. That's a long time, right? It's a very long time. And basically, in 3 years, it was at $38, and then with the 300. So kind of look at that little that formula of like holding a stock for 2, 3, 4 years. You can make a lot of cash there, and if you're in the right trend there. At the same note, it's been somewhat potentially, if it can stay above that 180 and even above that 165, 166 range, which is that 200 EMA here, I think the stock could potentially hold. But looking for the catalyst on potentially seeing on this stock to continue to run, it's really going to be coming into acquiring new businesses and really just the large companies adapting to the tele-doctor kind of communication, which I think more and more people will, because again, the genie's out of the bottle, the cat's out of the bag kind of scenario where it's just not going to be people's mindset have changed on how seeing a doctor for the relative ease of what Teladoc does. So looking at Teladoc on that side, the scope of kind of things, very much not like my favorite kind of chart pattern to just kind of get into. Again, I would like to position myself on maybe getting into this. Again, this is going to be a little bit more higher conviction than the Invitae because of it has somewhat of a proven track record. Invitae is more like a very high spec play for me. So again, what I mean by that would be a smaller position size or a smaller percentage of the portfolio rather than a Teladoc, which it has a track record and it has a little bit more. Not saying Invitae has doesn't have growth, but it just you have to kind of look at it on a fine tooth comb of like Invitae could just go away. Even though the company looks fantastic product, but there could be another one around the corner or whatever. They could be gobbled up by Teladoc. Who knows? Like, could you like it? Just the risk to reward. The risk is much higher in Invitae than it would be potentially in Teladoc. So with that being said, please, thank you for stopping by. And if you have any comments or questions, please put it down in the description below, or join the Discord. We have the Discord link down below in the description. We have a fantastic a link to Audible, so try your free Audible as well. So Audible is a fantastic product to allow you to listen to books, not on tape anymore. It's via your iPhone, your iPad, or your computer, or in your car, or whatever however you listen to books. I highly recommend it. I've been using it for literally probably 10 years. I listened to hundreds of books, not thousands, thousands of hours of books. But definitely check that out. It helps support the channel. And as well, if you're interested in opening a Tastyworks trading account and getting 100 free shares of opening account of $2,000 or more, definitely check that out down below if that's something you're into. If you like that in your coffee. On that note, I think everything's pretty much categorized up and looked through here. Again, love to see you in the Discord. Love to see you on the next live stream. Please, again, please do hit the like and subscribe on the way out the door. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.